You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
The trading day doesn't start when the opening bell rings. Pros understand that risk never sleeps, and market-moving events happen around the clock. How can you arm yourself with the information you need to understand what's going on across the pond and how it can impact your portfolio? Welcome to the European Market Brief, your go-to source for information on the fast-moving European derivatives markets. Each episode brings you expert insights into the latest market trends, discussions of cutting-edge trading strategies, breakdowns of exciting new products, and analysis of thought-provoking trading activity. The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro stocks, VSTOXX, DAX, and European rates derivatives like the Bund, Bobl, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com. So join us as we shine a spotlight across the pond and explore the cross-border volatility, regulation, and innovation that makes the marketplace so fascinating. It's time to get the European Market Brief.
All right, everybody. That music means we are back. Hard to believe we're already at episode 3 of the European Market Brief. My, how time flies when you're having fun. My name, of course, Mark Longo from theoptionsinsider.com. I want to welcome all of the newer listeners who are joining us here on this program, as well as all of our old standbys from the network who are discovering some new markets with us here on the program. Welcome to all of you out there. You know, we don't launch new shows very often on the network. We've done it twice in the last year, and it's been great to see the response to all of them. You never know when a new program connects with the audience, what the response is going to be. And so it's been great to see so much response, so much feedback, and so much support of the new program. Thanks to all of you for joining us and for rating and reviewing and sending in your questions and comments. It all means a lot at the end of the day as we're moving on in to episode 3 and joining me to discuss all things across the pond when it comes to markets. First off, my cohort, my partner in all things European crime, none other than, we call him Dr. VIX on the other show. For this show, he is Dr. VSTOXX, moonlighting at the Kelley School of Business over there at Indiana University, also working on a book or two in his spare time. None other than Mr. Russell Rhoads. Russell, welcome back to the European Market Brief, sir.
As always, thrilled to be here, and keep a close eye out because I've got an update on that that systematic ratio spread thing that I've done, that I do with VSTOXX. I updated it, and it was a very helpful way to have volatility exposure through a lot of the goofiness over the last 3 or 4 years. So keep an eye out for that.
I'm looking forward to that little tease of what's coming up later in the show, listeners, as we are also joined by Sophie Granchi. She is the equity and index sales lead for Europe, the Middle East, and Africa over there at Eurex. Sophie, welcome back to the network and welcome to the European Market Brief.
Thank you, Mark.
How are things in Europe, the Middle East, and Africa? That's a very broad purview. You must be a very busy woman.
Well, we've been lucky, because since the beginning of the year, we've definitely seen some flows coming back to Europe and some volumes with the increased volatility. I mean.
All right. And then 3 is not enough. Let's add a 4th chair, listeners. Joining us for the first time on the program and indeed on the network, he is Patrik Herrmann, the Vice President of Index Product Management over there at STOXX. Patrik, welcome to the European Market Brief, sir.
Hi, Mark. Thanks for having me. Great to be on the show.
And Patrik, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background, as well as for a lot of our U.S. listeners who are maybe a little bit newer to STOXX, also give them a bit of an overview of what the heck is STOXX, sir.
Sure. So my personal background, I'm working within the index industry since like roughly a decade now, coming from operations to client relationship management and now in product management. Joined STOXX in 2022, so 3 years in now as well. And so STOXX is a European-based European index provider, which was founded in 1997, and is now part of the ISS STOXX Group, which is a support of Deutsche Börse. So Eurex and we are sister cousin companies, and we are most famous for European benchmarks like the Eurostoxx 50, STOXX Europe 600, but we will delve into this in more depth later as well, and the DAX indices. And so our indices are used by asset managers and other clients for ETFs, structured products, and derivatives.
All right. With the team assembled, listeners, let's dive on into a continental conversation.
It's time to catch up with the thought leaders who are shaping the European derivatives markets. It's time to have Continental Conversations.
Such jaunty music for this show, listeners. Welcome to the Continental Conversations, where we drill down into a topic that is interesting to the world of European markets and see how it might impact you here in your trading, both in the US and indeed across the pond. And today we're going to go on a quest this week in this episode, listeners. Not for the Holy Grail, even though that would be fun, but maybe for our own version of the Holy Grail. We're going to look for what effectively is the European equivalent of the S&P 500. Of course, the S&P here in the US, the dominant index, the dominant benchmark for a variety of reasons. It's a very broad, deep, liquid index. A lot of the names you're familiar with, you use every day, are listed in it. It's just the household name at the end of the day for equity market exposure here in the US. But on this show, we're looking to go across the pond and explore those markets over there. So what is the equivalent across the pond when we're looking at the European markets? Obviously, a very different landscape over there in Europe, a lot more choices over there when it comes to where you want to invest your dollars when it comes to broad equity exposure. Obviously very fragmented across a wide variety of regions and regulatory frameworks. So it's an interesting space. Let's dive into it here on our Continental Conversation. Let's go in the order that we started with. Let's kick it off with Mr. Rhoads. Mr. Rhoads, sir, obviously a very different scenario when we're looking across the pond from a macro market perspective versus here in the US. When I ask you that question, from an index perspective, you're looking across the pond, Europe versus the US, sir, what leaps to mind?
It's volatility in Europe than in the U.S. I do think the Eurostoxx 50, even though it's 50 securities, is an excellent benchmark for what's going on over in Europe. And those of us that look at dispersion trading and things like that in the U.S., we know that you can get basically S&P 500 exposure by just using the top 50 stocks. It's like a huge percentage of the market capitalization. So I've never really felt like the 50 stocks versus the 500 stocks is that much of a difference. I think they're both extremely representative. The volatility of both indexes, even though one has 50 and one has 500, they're pretty much in line with each other, although VIX is typically at a little bit of a discount to VSTOXX, but that hasn't held up lately. They've been flipping spots. So when I look at Europe, the main thing that I look at every weekend when I write up what I've seen in the markets, it's I think Eurostoxx 50 is the best indicator. I'm still looking at DAX and some of the other more country-specific ones, but to get a read on the whole continent, Eurostoxx 50 is I guess it's where it's at. If you guys want to steal that and use it for advertising.
Eurostoxx 50 is where it's at.
It's where it's at,
says Russell Rhoads. Put that on the back of your book jacket, sir. Patrik, same question for you, sir. As I alluded to at the start of the segment, obviously very different marketplaces, very different landscapes. You're looking at the U.S., heavily concentrated in the S&P 500. There's been a big discussion over the past few years in particular, maybe too concentrated. It's 500 names, but really all the action was in the Mag 7, maybe the top 10. So that's been a big heated discussion point here in the U.S. Maybe we're a little bit too concentrated here. And on the flip side, you have Europe, which is very fragmented across a variety of marketplaces and products. So Patrik, as you look at the two, what springs to mind in terms of similarities and differences for you, sir?
Yeah, I guess I can also only echo Russell with his remarks. Like Eurostoxx 50 is a synonym for European economy and development. On top of that, we also have the Stocks Europe 600, which also looks at non-euro denominated indices, securities, like getting exposure to Switzerland, to the UK, also giving investors a broader exposure to the entire continent, also taking into account what you have mentioned, like the similar differences in regulation, etc. I guess one thing that's sticks to me directly is like the difference also in exposure between the two continents. US is very tech heavy, like with our Stocks USA 500 having 35% in technology, while in Europe you have a high focus on financials with similar profiles in Eurostoxx 50 and Stocks Europe 600, and industrials are picking up also with recent macro trends and boost in government spendings on defense.
Patrik, I'm confused. You're saying there are names to invest in other than NVIDIA and Tesla and what does that even mean? What language are you speaking, sir? Madness. But yes, a little bit different exposure over there when it comes to Europe, which sounds like for a lot of people over the last couple of years, we've been hearing it obviously here on the network. Of course, the broad financial markets have echoed this as well. A lot of people may be getting a little fed up with that concentration in just a handful of names. So if that's the case, perhaps the stocks is your huckleberry out there. Let's go out to Sophie as well. Sophie, same question for you. What are your thoughts on these two marketplaces, kind of comparing and contrasting? And also from your perspective over there at Eurex, if folks want to engage with these markets, what products can they use to do so?
Well, they can use futures. We have a lot of futures available on those indices, whether it's the DAX, the Eurostoxx 50. It's true that the volumes where we've seen the most activity is the index where we see the most activity is the Eurostoxx 50 futures. But a lot of the clients are as well looking for some either sectors or country exposure. Specific country exposure. So the Eurostoxx 50 is a very concentrated index as well, as you mentioned, for the S&P. And we've got two names in the index representing more than 15% at VMH and ASML. So some of the clients sometimes wants to cover a specific risk, and they would look at a country or a sector where it fits these needs, and futures are available on those indices.
Patrik, we mentioned some of the products here. We just talked about the Stocks Europe 600, which, by the way, I love that. Why go 500 when you can do 600, Patrik? It's just that much better. I like it. We'll get to all that fun in a second, but of course, some people who are listening to this, maybe they're already tangentially familiar with the European markets. Maybe they've seen some other indices quoted out there. You've got the FTSE 100, you've got the indexes from MSCI. If they're familiar with those already, how do what we're talking about here, the Stocks 50 and indeed the Stocks Europe 600, how do they stack up, Patrik?
Yeah, so I guess we at Stocks, we have a long history of providing investable benchmarks. So the DAX, for example, has been launched in 1988. And with the Stocks Europe 600 and the Eurostoxx 50, which were also launched still in 1998, we have over the time built a broad ecosystem with our clients. Like we have ETFs on those indices, we have structured products, we built an entire ecosystem on derivatives on this with our global partners like Eurex, also big ETF issuers. So we have a strong track record in producing investable products. And also year to date, we saw massive inflows into European equities. Like only on Stocks Europe 600, Eurostoxx 50, and the DAX, we have net new assets of roughly 12 billion year to date. And so we have a very good standing in Europe and partnering with clients to help them differentiate themselves from the others.
And obviously, Patrik, I was joking earlier about the 600, but it probably does resonate for a lot of our audience who are maybe a little bit fed up with, as you mentioned, the concentration here in the U.S. Let's add another 100. So what are we talking about? Stocks Europe 600. What are some of the constituents there? And looking at what we were talking about earlier, that elusive holy grail of what is the S&P 500 for Europe, how does the Stocks Europe 600 stack up, sir?
Yeah, so as Sophie mentioned, like we have ASML, some technology for US people, and also we have SAP technology provider and accounting company Louis Vuitton. We have also big pharma companies, pharmaceutical companies, and also now on the fly, defense sector is growing with Rheinmetall being added now to the Eurostoxx 50. So this is a notable intra year change.
And Sophie, Eurostoxx 50, I think for a lot of people is going to fit that bill, is going to be the elusive S&P 500 in their portfolio when it comes to Europe. But like we said, the Europe 600 has an interesting ring to it as well. What are your thoughts on the use case for the Stocks Europe 600? How does that stack up against the S&P 500?
Well, the Eurostoxx 50 futures were used solely as our benchmark for Europe for years and years. And recently we have seen the emergence of the Stoxx 600. And we mentioned that because of the concentration as well, because it was not really representing the need of asset managers. If you take the example of a classic asset manager with long equity stock looking for protection, is generally benchmark on MSCI Europe in Europe, and it needs a proper coverage and a proper protection. The Eurostoxx 50 unfortunately doesn't deliver always that type of protection, and that's why more and more we've seen asset manager looking at protection on the Stoxx 600. And if you look at the volume on the Stoxx 600, we've seen a lot more protection than actually some directional bet or volatility arbitrage bet. I would guess the Eurostoxx 50 is still very much used for a volatility arbitrage because it's, as we said, concentrated, so much more volatile. So all the trading desks will probably be more keen on trading this, for volatility, dispersion, and so on. But the Stoxx 600 is really more and more becoming the reference for protection for asset managers.
It's not often, Sophie, when you go on a quest, you find not one holy grail, but two. We might have two answers to our question of what is the S&P 500 of Europe. If you want the more liquid, the more readily available, top of mind alternative, obviously the Stocks 50 is there for you. Maybe you want to go outside the box a little bit, maybe a name you're less familiar with. That's really the purpose of the show at the end of the day, is to introduce you to some different areas you may not be familiar with. And maybe the Stocks Europe 600 is for you, particularly if you're amongst that crowd who has been lamenting the heavy concentration in just a handful of names here in the US. Maybe the Stocks Europe 600 fits the bill for you. And Sophie, we're talking about getting access to these products Obviously, these are trading across the pond. For the folks here in the U.S., what are the trading hours of these products? How can they access them?
Well, the futures are opening on all our benchmark for the Asian opening. So that would be 7 p.m. EST. And we offer coverage of 21 hours for a day. So that would close with the S&P at 4 p.m.
And Mr. Rhoads, from the perspective here of a U.S. trader, or maybe you're a portfolio manager here and you're stroking your chin listening to this and saying, perhaps those might appeal to me as I'm looking to get some exposure across the pond. Which of these two do you think they should be looking at? And also, why do you think these might have some appeal, some cachet for a U.S. trader or portfolio manager?
Answer your second question first, and then I'll probably ask you to ask me that first one again because I'll forget. But the big appeal, I think, and you've talked about one of the big arguments around the S&P 500 is the massive concentration of a handful of stocks. Well, that concentration is technology as well. And if you look at the top 10 names in the S&P 500, only 4 industries are represented. If you look at the top 10 names in both the Eurostoxx 600 and the Eurostoxx 50, you have 7 industries represented. So I think both of those indices give you more diversified exposure than the S&P 500 right now, just because of that massive outperformance of some very large U.S. tech stocks. I mean, technology is still a pretty nice way, pretty represented in both of them. But once you get below the top couple of names, you really do see a nice, consumer staples, healthcare, financials. If you're more interested in healthcare, I think you would lean more toward the 600 right now. That's actually 4 of the top 10 stocks in that index are healthcare oriented, whereas the 50. The top two stocks are technology, SML and SAP, and then you've got industrials, financials, communications, discretionary. I actually think that the financial exposure that you can get is a little bit better diversified than the financial exposure in the S&P 500, because the financial exposure in the S&P 500 is basically just a handful of very large banks that you can't tell their employees apart because they all look like finance bros. But I mean, they're all very, very similar firms. And I think the financial diversification in Europe the sector is just a bit different, and it offers a bit more variety, I guess the word I'm trying to come up with there.
There you go, listeners. If you've been asking yourself this question for a while, maybe what is the S&P 500 of Europe? You found 2 potential answers for you this segment. And also, if you're one of the many people out there who's been looking at the performance of the S&P over the last few years and obviously enjoying it, benefiting from it, but also maybe looking at it and saying, I think this is maybe a little bit too concentrated in a handful of predominantly tech names. If you wanted to move outside of that, get some exposure to some other sectors, let alone some other markets, then perhaps the STOXX 50 or, of course, the STOXX Europe 600 are the choices for you. Meanwhile, the choice for us is to keep on rolling right on into the overnight desk.
What's lighting up the tape in the European derivatives markets right now? Let's find out. It's time to check in with the overnight desk.
I'm loving the music for the new show. It gets me pumped up here, listeners. All right, welcome to the overnight desk, the portion of the show where we dive into some of that activity that's been lighting up our tapes and indeed these markets. Patrik, we'll start with you, sir. Let's look at some of those indexes we were just talking about, STOXX 50, maybe the Eurostoxx 600 as well. Obviously, these are some wild markets we've been dealing with throughout the first half of the year. The last couple of weeks, we've seen it maybe quiet down a little bit. Maybe this is just the calm before the storm. Maybe everyone's just resting up before the next whirlwind to come. But obviously, as we touched on in our first episode, listeners, these markets have been buffeted by the trade wars. We've seen a lot of volatility as a result. Some of that volatility coming off the board a little bit as well, but we never know. Is this just, again, the calm before the next storm out here in the market? So, Patrik, in that context, all this market tumult we've seen over the last few months, what are you seeing in terms of customer behavior on your end? What are they looking at from an exposure perspective? Has it been just a mad dash for hedging over the last few months? Have you seen a lot of speculative buying, maybe even when we got down to some of those lows last month? What have you been seeing on the customer side, sir?
Yeah, sure. So I guess like since the beginning of the year, also end of last year, we saw some massive growth in interest into European equities in general. Also, as mentioned previously, like we have seen like 12 billion inflows into ETFs based on European indices, which we calculate this year to date. So we see a lot of momentum for European market. Also, those risks might be opportunities for clients, for index providers like us. And yeah, so one of the, let's say, most prominent recent examples is like the rapid growth in interest into the European defense sector based on government or macroeconomic decisions taking place in February. And that's also where we partnered up with Eurex as well, and showed like our time to market to build a product focusing on European defense, and which is also available now for investors via ETFs as well. So this is a big trend we saw recently, and where we were able to showcase our customization capabilities.
Yeah, who would have thought even a few years ago we'd be talking about the European defense sector was the definition of sleepy, then go figure a shooting war pops off on the continent, and suddenly the European defense sector is an area of interest for a lot of people. So if you're intrigued by the sectors out there, I know a lot of people are these days, listeners, and perhaps if you're looking at Europe, you want to drill down a little bit farther, maybe the defense sector is the one for you out there. Sophie, same question for you. You're obviously engaging with the end users on a day-to-day basis out there across a broad region, not just Europe, but the Middle East and Africa as well. We haven't had a chance to chat with you since all this tumult really started kicking off earlier this year. So walk us through what you've been seeing from an end user perspective. When you're on the phone, when you're contacting these customers, what are they looking for? What have they been up to in these products? Has it been the same thing I was asking Patrik? Is it just a lot of hedging? I know for a while there, things got a little bit too spicy. People were taking their ball and going home when the volatility got a little bit too high. Did you see some of that in your end users? And what are you seeing right now as we're heading into maybe, hopefully, a little bit quieter start to the summer?
Yeah, I think clients have been maybe a bit surprised by initially, the Europe taking off and kind of decorrelated with the US. So we've seen more and more clients, even, from the US coming to Europe, asking for products that they can trade. And so definitely people have been chasing the market for the first few months until we've seen quite a lot of volatility in April, which was quite good in terms of volumes. I think liquidity was also good. You could trade in and out of our products quite easily. So people were engaging on all the futures. Now, my guess would be that if you look at the level of the VSTOXX at the moment, there is quite a bit of complacency. So they probably have a little bit less hedging than before. So people are sitting in their long positions and quite happy with it for the time being. So that's what we're seeing. And obviously, we have as well different type of clients. We have institutionals, as I mentioned, the asset managers, but we've got as well volatility clients that plays in generally more the Eurostoxx 50, as I mentioned. But we have as well some retail clients who are looking at smaller versions of our index benchmark. And we've created some micro and nano DAX futures, for example, for making it easier for retail clients to play on our products.
Everything's about small these days, Sophie. The smaller, the better it is for a lot of even a lot of the large institutional users these days. They just want a bite-sized product out there at the end of the day. So yeah, the smaller you can make it, Sophie, the better it seems like it is for everyone these days. Russell, we'll get to all the VSTOXX fun in a second, but for a lot of our listeners here in the US, as they're looking at these broad markets across the pond in Europe, from a broad index perspective, we hear a lot about the premium harvesting trade here in the U.S. A lot of folks, I'm not sure if you're aware of this, a lot of folks like to capture a little bit of that old risk premium. We've talked about it ad nauseum here in the U.S. We don't talk about it as much across the pond. So let's start there. What are you seeing in terms of premium writing out there in the world of, let's say, Euro Stoxx 50? Maybe you agree with this, maybe you don't. The belief is some of these folks are really the legion of folks who are coming over from the US looking for some more premium harvesting, some more premium overwriting type opportunities. Maybe they're dampening down some of that vol, sir. What do you think?
Dailies have been around for about 2.5 years, I think. And it doesn't appear that, at least on a massive scale, that anybody's using the very short-dated index options to try to take advantage of that risk premium that we talk about. And in fact, in the U.S., and this is something I think I've spoken on different programs with you, but in the U.S., you're actually better off buying one-day straddles on the S&P 500 and the NASDAQ. And that really, over the past year and a half or so, and that really is a function of a lot of systematic firms getting in there and selling premium every day and trying to take advantage of what they perceive is what should be risk premium, but there hasn't been enough risk premium to take advantage of that. You don't see the systematic in the Euro Stoxx 50 like that. You see decent volume, but I don't think you're seeing anything that has structurally pushed the implied vol down, that the options are consistently underpriced like their U.S. counterparts. And there's still opportunities to consistently take advantage of overpricing of short-dated options using Euro Stoxx 50 that just really hasn't been around with the S&P 500 and the NASDAQ. And sometimes when we've got major economic numbers, I know some traders in Europe that may take a short position in Euro Stoxx 50 implied vol and offset that by maybe buying some U.S. index options when we're getting one of the major numbers over here.
So I'm going to ask you now to put on your Dr. VSTOXX hat for a second. I know a lot of our listeners are curious about what you're seeing on the VSTOXX and indeed the vol front. You've also been tracking some interesting trading activity out there, as you alluded to, you teased us with at the top of the show, sir. So what are you seeing on the VSTOXX and indeed the vol front right now, sir?
VSTOXX has, after a very long period of, I'm going to use a really technical term here, kind of goofiness. Flat curve, inverted curve, a bump in the curve because there was a feeling that maybe we would get another election. There has been some really unusual news-driven activity in the outlook for volatility for pretty much 5 months this year. And then in the past couple of weeks, VSTOXX, if I were going to write a third book on volatility and I wanted to show what a normal term structure looks like with volatility, VSTOXX is there right now. We've got an okay premium with June relative to the spot, and then we go out and the curve looks about as normal as you would expect. And that just hasn't been the case for most of the year. So just to reflect what Sophie alluded to, I do think that VSTOXX is not necessarily saying, green light to the upside for the Euro Stoxx 50 and European equities, but it appears that the amount of risk that people are concerned about from day to day seems to have diminished to a certain point, and we're seeing that reflected in that normal curve.
And you've been tracking a little bit of ratio spread activity, sir. How has that been working out, and what are you noticing for our listeners, sir?
So a while back, about 3 or 4 years ago, I wrote up an approach to using VSTOXX options where you basically sell an at the money call and then you buy 2 out of the money calls, and you do this at a credit. And if nothing happens, you make the credit. If we get a moderate move to the upside in VSTOXX, you might be in trouble. But when we get one of the massive moves to the upside, you benefit greatly. And that approach on a consistent basis works with VSTOXX. It doesn't work with VIX. I've tried variations on using both markets, but it's just, and maybe it's because we have shown that VSTOXX and the VSTOXX futures, when we have these volatility events, are more reactive to the upside than VIX. And maybe that, I'm actually thinking out loud now. I hadn't put those two things together before. But I think maybe just we get more of a reaction to the upside when we get volatility events out of VSTOXX than VIX. And maybe that's, that's the market you want if you think the next volatility event is coming up.
That's going to come as unwelcome news, Mr. Rhoads, to the lion's share of folks that we profile every week on Volatility Views, who are doing all sorts of ratios and VIX options, 1x2, 1x3, a lot of 1x4s. Those are all going to be very sad people now because of you, Mr. Rhoads. How do you feel about that?
Just so used to getting beat up on. I'm coming back here in 2 hours for you to beat up on me. It doesn't bother me. That
won't be my job. That will be Mr. VIXologist's job. I will be the impartial referee, sir.
No, I'm just going to tell you what I see in the numbers. You know what I mean? I'm a free agent now, so I get to say exactly what I think. And I'm just telling you, when I slice and dice them, VSTOXX does appear to be more reactive to the upside when you want that exposure. I don't know if it's because there are fewer number of stocks in the index. I don't really know the reason behind it, but we have seen that when there's trouble in the world, VSTOXX does do a bit better to the upside than VIX.
And Patrik, before we roll on into the red phone to tackle some listener questions, we were talking earlier about the sectors. And I know for a lot of our listeners, that is a key area of interest. A lot of them are looking to drill down, especially now, getting back to what we were saying at the top of the show about the heavy, some might say, oversaturation in the S&P 500 in the tech sector. Folks want to move beyond that into almost any other sector. Financial, we mentioned defense as being a key area of interest from a sector perspective in Europe. If folks are looking to maybe roll their own, to build their own from a sector perspective, what do they have available to them over there across the pond, Patrik?
Yeah. So we have recently, previously, economies have been reflected by taking exposures through the traditional sector definitions, provided by ICB and or, for example, JIX. So currently, we see a more and more trend into customization, where we break out those classical sector definitions and go way deeper, where you can dive deep into the revenues of companies to reflect really the understanding and also the thoughts of our clients. So basically, it's a collaboration and customization, what we see demanding, especially when it comes to European equity and also defense, how we bring into your personal thoughts how to capture these topics directly. So we have a long-standing knowledge in thematic indices, also factor investing. So basically, where we collaborate together with our clients to find the right methodology they have in mind for their future products.
All right, listeners. So if what we were talking about here maybe doesn't fit the bill for you, then perhaps something a little bit more customized might fit the bill. But always fits the bill for us listeners. It's your questions, it's your comments, it's your feedback. Let's get to some of that now as we answer the red phone.
What's on your mind as you're navigating the wild world of European derivatives? Let's find out as we answer the red phone.
All right, everyone, welcome to the red phone. It is, of course, the listener questions segment here. We'd love to see so many of you folks rating, reviewing, downloading, streaming, and of course, engaging with the show, whether it's on social media, at Options on most of the major social media platforms. Listeners, questions at theoptionsinsider.com also works if you want to reach out to us directly. Of course, all of you listening live there in the Pro can do so directly. Like to see a lot of you listening live right now, having a great time. Frank1209 says, I love this. Definitely opening up my world with European options, pun intended. Yes, that is kind of the purpose of the show there, Frank. Glad you're enjoying it there. Just trying to present some alternatives to you out. We've heard your complaints. We've heard from you folks for years now. You know, I'm kind of done with the Mag 7. What else is out there? And so here you go, listeners. Alternative options, pun intended, for you out there if you're looking a little bit across the pond. Also, a lot of you looking for a little bit more geographic dispersion in your portfolio. So these obviously fitting the bill as well. Another question from Option God, he wants to know isn't IB the best U.S. trading firm for trading a lot of these products here? Like we're talking the Euro stocks. Yes, we had Steve Sosnick on episode 1, you might remember, Option God, of the European Market Brief. So if you're looking for a U.S. outlet to access a lot of these products, IB is definitely a great place to go. They're starting to become available in more places as well, but IB right now has them. So if you want to reach out, I'm sure Steve will be happy to answer a lot of your questions over there as well. So yes, the answer to that, IB, a great destination, a free plug for those guys on the show here, but IB obviously listing a lot of these products here as well. And then we have a question. I love to see questions coming in from all over the world, and we've received questions from just about every country under the sun here over our 18 plus year history. I'll have to go back and check though. I can't recall anyone specifically writing in from Greece before. So Antonius, maybe Antonius, you get pride of place. Let's go with Antonius. I like it. It sounds more like it's from antiquity. But he says, greetings from Athens. Well, greetings back to you there, Antonius. He said, I would like to know more about VSTOXX. In particular, why is it always trading above VIX? Is it just because it's based off of an underlying index with a smaller number of constituent stocks? Is this a recent development due to the war in Ukraine, or is there another fundamental reason for this discrepancy? Thank you very much for taking the time to answer my question. Well, thank you, Antonius, for taking the time to write in all the way from Athens. We appreciate all of our listeners around the globe. Now we can put a little pin in Greece here on the Options Insider Radio Network map for where our listeners are spread, at least where our questions have come in from all around the globe. Mr. Rhoads, we'll start with you as this one's right up your alley here, sir. Obviously a newer listener. They haven't heard some of our conversations in the past about VSTOXX versus VIX. So let's start there. She wants to know, or perhaps he, why is it always trading above VIX? Is it just the fact that it's 50 versus 500, or is there more to it? Perhaps they also mention the war in Ukraine, sir.
He's trading at a premium. It does more often than VIX, and I feel like probably the top reason would be it's based on the Eurostoxx 50, which is has a fewer components, which might raise the risk profile. But the Russell 2000 continuously has more volatility than the S&P 500, and there's 1,975 stocks in the Russell 2000. So the number of stocks doesn't necessarily isn't necessarily the sole reason there. But I do think that if you've got an index where, if one industry has and you've got an overrepresentation in there, you've got bad news in a single industry, it could create more volatility in the underlying index. Typically, it's kind of interesting when there's more perceived risk in Europe, maybe there's an election coming up, et cetera, you'll see those two widen out with VSTOXX falling at even more of a premium. The time that you often see VIX at a premium to VSTOXX, it usually occurs when there's just fear around the world. VIX takes on, we talk about different volatility regimes, high and low. I think there are instances where VIX is sometimes focused on global risk and sometimes it's focused on US risk. And I don't know how we would define those two, whereas VSTOXX is focused on the same risk parameters on a consistent basis. So when there's more global risk concerns, you do see VIX move to a premium relative to VSTOXX. I feel like it's somewhere between 10 and 20% of days. I was trying to find my spreadsheet where I ran the numbers recently, but VIX is not, or VSTOXX is not always at a premium relative to VIX. There are times when they do flip positions. And for a good portion of 2025, we've actually had instances with VIX higher than VSTOXX, thanks to our current president in the United States.
Sophie, same question for you. You're out there dealing with the folks day in, day out, boots on the ground, the end users of this. So if you have anything to add for Antonius, and also as our Europe representative over there from a markets perspective, do you see a lot of penetration for VSTOXX in Greece? If not, we might be opening up a new market for VSTOXX here, Sophie. What do you think?
We do cover clients in Greece, so I'm not surprised, to have some question from there. Back to the VSTOXX, I would say, yes, we've seen the VSTOXX probably a little bit higher in general than the VIX. And I would guess that it's back to the comments that we don't have so many strategies that are selling volatility in Europe compared to the US. So the VSTOXX is probably staying a little bit more elevated because the Eurostoxx 50 volatility is less compressed than the S&P one. So that's one of the reasons. The second thing as well is that the VIX tend to be probably more volatile in a way. The vol is quite heavy. Once you have a global risk, the VIX will probably rally sometimes more than the VSTOXX in general for global risk, but as well the mean reverting is very quick. The VSTOXX is probably only reacting massively to European risk, like we've seen during the European election is in June 2024. But as well, you have more time to capture your gain if you're long the VSTOXX. So there is a lot of strategies that have been going on, long VSTOXX, short VIX. For that purpose, is that sometimes it's quite interesting because you have time to take profit on your position, while the VIX is quite difficult sometimes as it's been reverting very quickly.
Well, that music means we're out of time to capture any more of this episode. Great questions. Thanks to everyone who took the time to reach out to the show here. We love all of you out there, all the new listeners to the show. It's always gratifying, like I said at the top of the show, whenever you launch a new program to see the response to it being so strong. So thanks to all of you who take the time, and Antonius, however you want to pronounce it, thanks for letting us put Athens on the map there from our listener feedback perspective. Unfortunately, that is all the time we have for episode 3 of the European Market Brief. But before we go, let's go around the horn. We'll start with you, Patrik. If our listeners are intrigued about anything we talked about here on the show today and they want to learn more, where should they go? What should they do, sir?
Yeah, I can only recommend our listeners to go to www.stocks.com, stocks with 2 X's. And there they will find all the information about our indices, blog posts, white papers as well. And we're also active on social media, on LinkedIn with our stocks channel.
There you go. So follow them on all your favorite social channels and check out their website if you want to go a little bit deeper into the product perspective, the contract specs, some of the research, white papers. A lot of the questions you may have after listening to this could be answered there, so make sure you're checking it out. And Sophie, same question for you. If folks are intrigued about all of these things we were talking about here on the show and they want to learn more, where should they go? What should they do?
Yeah, well, we've got Eurex.com where you'll see all the information, or people can just reach out to me and I will be happily responding to that question.
And how do they reach out to you, madam?
They can go on LinkedIn.
All right, there you go. You can find her on LinkedIn, listeners. It's Sophie, Sophie, and then Granchi, Granchi. If you want to spell it out there, if you want to reach out. Very brave of you, Sophie, to offer your personal contact. So there you go. Reach out to her with all of your questions and comments. Maybe we'll feature them on a future show if they are intriguing. Speaking of questions, Mr. Rhoads, if folks have questions, specifically going back to the ratio spreads we were talking about earlier out there in VSTOXX, maybe they want to learn a little bit more, a little birdie whispering on my shoulder telling me that perhaps there is a webcast coming up, I should say, they should check out.
Till late July, I'm still trying to nail down the date. I'm going to do a webcast on VSTOXX with Interactive Brokers and go over that system and talk about a couple of other things with respect to VSTOXX that differs it from VIX and how you can actually trade it in conjunction with VIX as well. So everything I do, I just put it out on Twitter and that's my full name, Russell Rhoads. I don't debate on Twitter. I don't care how nasty you try to get with me. I'm not going to play there.
There you go. Check him out over there. 2 S's, 2 L's, RHOADS. And if you want more vol talk from Russell in your life, stay tuned. If you're on the pro side, you'll be hearing it in a little bit. It'll be coming up at 1 p.m. Central. A unique, one of its kind episode here. A volatility, grudge match, death match, battle royale, call it what you will. 2 men enter, only one will leave. Dr. VIX versus the VIXologist, debating some of the finer points of the vol market. Check it out. You've never heard anything like it, trust me. If you're listening on demand, if you're on the pro side, you'll have already heard it. For you on demand folks, maybe we'll see what we can do for you folks. Some snippets, some other fun out there. But thank you for joining us for episode 3 of the European Market Brief. We'll be back a little bit later with the aforementioned volatility battle royale, and then back with our usual array of content till we're back again in a couple of weeks with the next episode of the European Market Brief. Stay safe out there, everybody.
The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro stocks, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.